Good morning and welcome to 3 Minutes. Well, it's going to be a little bit more than 3 minutes today. We got a good bit to go through this morning about where the markets are trading currently. Over the last few days, we've been talking about this money flow indicator getting ready to turn positive. Hasn't done it yet. This has really kind of been the whole conundrum this week. The S&P holding the 50-day moving average. The money flow signal still negative, but importantly, pay attention that money flows are positive. So we are having that support, and that's what's keeping this market really within this consolidation pattern that we've now been in for over 4 weeks. That's really been a function of this entire indicator. The MACDs are getting very oversold now to the downside. Money flow indicators very oversold as well. Now, we can take a look at this in reverse by taking a look at the S&P 500 short index. So if we take a look at that index, we see obviously the exact opposite, which is the money flow indicator now very elevated, about to turn negative. Money flows very negative on the S&P 500 short index as well. All this suggests is that we're likely to see a breakout of the S&P 500 short index above its 50-day moving average and start to see a bit of a rotation back into long equities at this point. So let's take a look at the NASDAQ. That's where we've been focusing some of our attention as of late. That indicator, that money flow indicator, very oversold. Lowest level we've seen since March of 2020 has now turned positive. Money flows not positive just yet, but heading in that direction. Likely we'll see that today or tomorrow. That suggests we're likely going to see a bit of outperformance relative to the S&P. Now let me be clear about that. Outperformance means that the S&P underperforms the NASDAQ. That doesn't necessarily mean the NASDAQ goes up. It could just travel here sideways. The S&P continues to underperform. We are expecting, though, to see a rotation back into some of the deflationary sectors of the economy, particularly the mega cap stock names like Facebook, Apple, Amazon, Netflix. See those stocks begin to outperform here a bit as concerns over weaker economic growth kind of start to show up here over the next couple of weeks in some of the economic reports. This is going to be a short-lived indication, though. This is only about a 4-week trade. This is not a long-term thesis through the end of the year. So we're expecting a rally here. We've been adding into the triple Qs into our portfolio here over the last few days, trying to look at this bottom. Get a rally here. We'll likely clear that position out in 3 to 4 weeks. Again, just a trading opportunity for portfolios. We still suspect there's more risk to the markets as we get into midsummer. Still, we have not had a 5% correction this year. And actually, we've had one of the longest advances in the markets without a 5% correction. We still expect that to happen sometime this summer, maybe June, July. We'll see when we get there. But pay attention again, lastly, to what's going on with bonds, because bonds continue to tell you that the economy is much weaker than expected and that likely by 2022, we're going to see the economy turn back to growing at around 2% growth, maybe less. That's going to impact earnings, which are exceedingly optimistic right now going into 2022. So lots of risk here for downward revisions in economic growth, downward revisions in earnings. That's going to put pressure on stock prices. In the near term, short-term trade, longer term, still being very cautious in our outlook. That's 3 minutes or so on markets and money. We'll see you tomorrow.